Good day, traders. How are we doing today? Once again, my name is Nathaniel Tunde. Welcome to this week edition of Market Outlook. I'll be bringing to you the outlook on some selected pairs. Of course, as you know, I cannot definitely trade everything in the market, but I have some selected pair that I focus on week in, week out, and those are the pairs I'm going to be analyzing for you today. I want to first and foremost appreciate all of you that have taken time to subscribe to my channel. I can see that most of you, you subscribe to it, you watch the videos, and you comment on each video you watch. I want to encourage you to keep on doing the good work. And remember, as you subscribe, you share, you like, you're not just doing it for me, you're also helping other people to, for YouTube to, show the channel and the content to other people who are looking for a solution to their problems. You are also contributing, for the emancipation of humanity, and keep on the good work, guys. So without much stories, I want us to go straight to the chart. First and foremost, I want us to go to Forest Factory and look for fundamentals that we are expecting this week. Forestfactory.com. I want us to check if there are fundamentals that we should expect. Calendar, okay. Calendar. Next week, this is let's say this is more. Let's go for more. This is okay. Monday, we don't have anything. Sunday nothing, Monday nothing, Tuesday nothing. Only Wednesday we have CPI. We have CPI on Wednesday. We should take note of that. Okay, that United States CPI. That's inflation. CPI is a measure of inflation. Of course, we know inflation has been on the rise, but let us see if the recent increase in the interest rate by 75 basis points will be able to, drop inflation to some extent. We also have PPI on the 11th, all right? That's Tuesday, on Thursday rather, Thursday, we have PPI, and we also have GDP figures for United Kingdom. GDP, we should also take note of this. And then lastly in the week, we're going to have preliminary consumer sentiment. This is not much of importance as far as I'm concerned. All right, so these are some of the fundamental news release we have for this week. Let's take note of them. Okay, just take note of them. Let's go straight to the chart. Let's go straight to the chart. DXY. Let's start from DXY, guys. Okay, let's start from DXY. Of course, you can see that DXY, I'm expecting a much bigger corrective structure. Okay, I'm expecting a much bigger corrective structure before we can have a move to the upside. Okay, and so in of course, my style that I always like to use daily for my direction. Okay, and sometimes I use 30 minutes or 1 hour for my entry. But for the purpose of this outlook, I'm going to be using 30 minutes. Okay, I'm going to be using 30 minutes. So what it means is that if your direction is right on the higher time frame on daily, there is no way, guys, there is no way you can get your bias right on lower time frame. So I always told people who care to listen that trades are won and lost in higher time frame. Once you are right in higher time frame, be sure that you have 70 to 80% chance, to be right on the lower time frame. But if you are wrong in your directional bias, you'll be in trouble when you get to lower time frame. Is that okay now? So what are we expecting here? I've told you we're expecting you have a 3-wave down. We're expecting a correction back to 50% before you have another 3 wave down. So if we measure this move to the downside in 3 waves, then you will see that the 50 to 61.8% is around this level. Remember, I told you that in a correction, when you have a first 3 waves push, even though it's a 3 wave, you are not going to treat it as a correction. You treat it as an impulse. And that is why you take the fib of everything to the downside. And that's why we are measuring it up to 50 to 61.8. So what we want is for this leg to push up to the upside. And you can see clearly here that I already see a beautiful engulfing candlestick pattern here to show that we are going to have this push to the upside before you have this move to the downside. Is that okay now? So now I have to go to 15 minutes to see how that move to the upside is going to take place. Of course, you see here, you already have this structure. Okay, you have this push down, you have this push down. So what we want now is a move to around this level. So if that's what we want, we already see a corrective structure here in the middle. You have a push up, then you have a push up. You are going to see a corrective structure here and a push up. Okay, so this will be W, this will be X, and then we now see Y here. Okay, now see Y here. That's what I'm looking at. So when market resume, okay, you're going to see a corrective structure here, corrective structure here to this level, okay, and you see a push up. You see a push up to the upside, okay. So after this push up to the upside, I want to see a move downside. All right. So if I have this forecast correct on DXY, it is what will determine exactly what I will be doing on some other pairs, like all those major pairs. That's what will determine it. That's what some people don't know. If you get your analysis right on your DXY, the possibility is there that you are going to get it right on other pairs. So that is DXY for you guys. Next, AUD USD daily. Okay, so if you look at AUD USD, you see that it has a 3-wave push down here. Okay, then you have 1, 2, and 3, another 3 waves in the middle, and then you are expecting another 3-wave down. Okay, how long this will go? We are going to use 2 measurements to get it. If you see a structure like this WXY structure, that WXY structure is a corrective structure that is correcting a certain impulse. And in this case, this is the impulse. Okay, where do you see 61% retracement? 0.618 is here, and then 78 is here. Okay, because it has possibility to come to 78. But I'm going to pick a fib level where I'll have to measure extension of this wave here. This wave here, correction, and this one that pulls down here. I want to get equal leg of this and this. I want to know where that equal leg will hit, whether it will hit 78 or it's going to hit 61.8. So if I pick trend-based fib extension, you drop it here, take it back to the end of correction. Can you see that equal leg is actually hitting less than 61.8 fib retracement? That's what equal leg is hitting. So I'm not going to take equal leg in this occasion. What I'm going to rather take is a fib to what? To 61.8. A fib to this level. That's what I'll be comfortable with. All right. And in coming to that level, you can see that AUD USD is also doing what other pair is doing. You can see that what we want to happen here is that this 3-wave structure to the upside, to the downside, after this impulse must be completed. We want this market to come break this top here before it will move down. This is what I'm looking forward to. And you can see that this is a complete structure for it to push down. Okay, so if that's what we are looking for, then you have to look at the market. How is it going to make its ways down its way down to that side, you will see here that clearly here is an impulse. This is an impulse, so we want a three-wave pullback back to what? 50 to 61.8. And if you measure it, if you take the fib of this leg here, you see that your 50 to 61.8 is right here. It's right here, guys. So if it's right here, you have gotten what you want on a daily time frame. You want it to come to this level, okay? And you see that this level is a good demand level, guys. So I just go to my 30 minutes time frame, okay, and look at the way this market is to come to this box. You can see clearly that you are seeing a three-wave structure. After this diagonal, guys, can you see? Can see, if you go to your indicator, you see that there's a clear diagonal. This one is making a lower high, and this one is making a higher high. Okay, haven't seen this. Every diagonal must break down in three waves, and these are the three waves: 1, 2, and 3. So this one is breaking down in form of zigzag. And how is this zigzag, guys? If you take a fib of this impulse safe leg, you can see zigzag say it must end at 52 or 61.8 and pulls down. Exactly what it has done, guys. So now, how does it navigate itself down to the low here? So all I'm just looking forward to see is a pullback here, probably in three waves, and then a pulls down. So when you get to inside this box, I want to see a deceleration. As I always told you, I want to see a deceleration. Okay, I want to see a deceleration, and then one move will go to the upside to break this structure. Okay, as soon as that structure is broken, all you just wait for is a pullback to 50 to 61.8 and take your trade to the upside. In that case, this will be a massive buy. And then where are you going to target as your TP? We target this level, guys, because this is the structure we are looking for in a daily time frame. Do you understand now? This is the structure we are looking for in a daily time frame. And then when the market hits this area, when it hits this area on daily time frame, you now go back to 30 minutes time frame. If you see a structure like this, okay, if you see a structure like this, that is an ending structure. And if it comes with a diagonal, okay, that is, if this should come here, if you should come over here, and if it comes with a diagonal, sorry, it comes with a divergence here, then you know that this move to the downside is going to come. This move to the downside is going to come, and that is where you're going to get your entry by allowing this ending structure to break down. Let it pull back to 50 to 61.8 or 78, and you take your trade to the downside. This is just the plan. This is how we plan down some of these trades. You don't just wake up and just jump into the chart and begin to trade. No, it's not done like that, guys. Okay, it's how you plan this. Then next is euro dollar. The same thing in euro dollar. We're expecting an upside in euro dollar, and in getting that upside, you can see that in daily time frame, we cannot specifically buy at the level where it is now, because we are seeing that we have a move down. Sorry, you have a push up, then you have 1, 2, and 3. We're expecting euro dollar to come down here before we can look for the next leg higher to pick order at this supply, and then for us to move down. So that is the forecast for daily. Then, since we are looking for down move to fill this space, then we look at 30 minutes time frame and see how it can come to that level. Can you see? Want to see how it can come to that zone? You can see clearly that this is a three-wave structure to the downside. I think I have to increase this to 2px. Can you see? 3 waves to the downside, 3 waves to the upside, and then we expect another 3 waves to the what? To the downside. We expect it to come over here. before we move for buy opportunity. You know, I have to show you clearly how I'm cutting the waves, because that seems to be the major problems of many people. That seems to be the major problem. You see here, you see this wave down. Here you see this uh, three waves up, three waves down, three waves up. You know, then 1, 2, and 3 in the middle. You have 1, 2, and 3 in the middle. Can you see? So you have move down, three wave up, three wave down. 1, 1, 2, 3. No, sorry guys. Let me come again. Let me come again. It's like this. Where is this arrow? You see three waves down. Okay, three waves up, and then you have another three waves down. Okay, that completes the first three wave structure. And then the other three wave structure, you see in the middle here, you see the corrective structure. That's what you'll be looking out for in the middle. And then what do you see after before the corrective structure? A wave up. After the corrective structure, another wave up. That's another three waves here. Then you are expecting the next three wave down. This is 1. Okay, and then this is 2 has come to 78 in form of zigzag. Then you want 3. This is 1. Then expect a corrective structure here, and then this one pulls down. That will complete what we are looking for, and that this will be W, X, and Y. And after that, you can see at this level, you can buy euro dollar to the upside. And which continuation are we buying? Continuation of this move here. Okay, that's the continuation of the move here. It's as simple as that. Where are we stopping? We want to catch liquidity here. About around the 1.04, I believe euro dollar should start coming down. Do you understand now? That is euro USD, GBP, JPY daily. Okay, daily time frame, because we have to take time to analyze the daily time frame so that we don't get our analysis right. If we get our analysis wrong in a higher time frame, we'll have problem and getting our entry in lower time frame. I want to believe that there's possibility of this market forming a triangle here. I'm looking forward to seeing a triangle playing out here, because you have 1, you have 2, you have 3, you have 4, you have 5. So I want to see this move to the upside. Okay, but for us to confirm the formation of this triangle, we have to ensure that it is not this move, that is being corrected. Okay, you know, back to this level. Okay, so if it's corrected to this level and it's making another wave down, then we have to watch it. For now, we can work on this. Okay, we can work on this. Of course, you see that in the middle here, we have expanding flat. Right here, you have expanding flat. You have an impulse. You're expecting another impulse to break this top. So you already have the initial move. Okay, you have initial move. So you are looking forward to seeing a retracement and another leg higher. So by the time you see this leg higher, it means that this move to the downside is being corrected. This move here is being corrected by zigzag to where? To 61 to 78% retracement, and exactly at this level we want to see this leg lower. Okay, want to see that leg lower for GBP JPY. If you see the leg lower and it break this trend line, it may not be triangle again. We're not going to qualify it as a triangle again. Is that okay now? All right, so that's what we are looking forward to in JJ. We want a correction, a push up to this level. It might even come and develop an ending structure here. Okay, an ending structure here. Okay, and then from here look for boom, correction, boom, to the downside. That's what you should expect for GG. Okay, GBP AUD daily. Okay, if you look at daily time frame, guys, one thing you notice on this pair is that right here, guys, you have equal low. Okay, and this pair has been finding it extremely difficult to move to the upside. Why is it finding it difficult to move to the upside? Because there are a lot of liquidity that reside below this equal low. Okay, and if that liquidity is not taken, it's not going to find it easy to push to the upside. And right now, what we have here is a 3 waves up. Okay, 3 waves down, 1, 2, and 3. Okay, and then we're expecting another 3 waves up to complete the structure and drop. Okay, but right now, what I want to believe is going on is that after these 3 waves up, okay, after these 3 waves up, okay, then these 3 waves down, 1, 2, and 3, I believe that these 3 waves down is about making 1, 2, and 3. For these 3 to come and take that liquidity I have been telling you is important. It's important for this liquidity to be taken, for this market to move to the upside. Okay, so this is what I'm looking forward to. And after that, you now look for buy opportunity to the upside in 3 waves. If it is 5 waves, then the structure is ABC. That is, what I mean is this: if what you have here is another 1, 2, and 3 for a move down like this, then this structure will just be a simple W, X, and what? And Y. But if in a situation, or what of a situation where these 3 waves does not come, but what rather come to this level is a 1, a 2, a 3, a 4, a 5. That means this structure has become a 3-3-5 structure. So it's no longer WXY structure, but ABC structure. A, B, and C structure. Is that okay now? So, but for the meantime, what concerns us is a possibility of this leg lower. And how do we capture, that leg lower? Let's go to lower time frame, because of course, in the daily time frame, it has already made a retracement of 50 to 61.8. This leg here, okay, it has already captured 50 to 61.8. Is that okay? It already captured this one. So for that reason, we are at liberty now to go to lower time frame to look for possibility of more downside. Okay, so right here you can see it's at 61.8 already. So it has rejected from there and it has made a move to the downside. So all you are looking for now, right now, is a correction. Okay, correction to this move to the downside. Look at it here. This move here to the downside, you want it to be corrected and you push down. Okay, so if you take a fib of that move to the downside, you see that you don't need to be told that this is going to form a zigzag corrective structure. Why? Because the first leg here is already almost hitting a 0.5 fib retracement. So all you just have to do is to see a corrective structure back to this level and a push to the upside to what? To 78. So this will be A, B, and C structure. Okay, after this A, B, and C structure, you now watch out for another leg lower. Okay, this leg lower is the one that is going to come, guys, to come and break the equal low that we captured before on a daily time frame. Okay, this equal low. Do you get now? This equal low will be captured. Yes. So we want it to come and break this equal low. Remember, this 3 wave structure you are seeing here is just a part of this one, this one. Break it. Do you get now? So it is only after this level is taken that I'll be comfortable to buy GBP AUD. All right, that's when I'll be comfortable buying it, because it's going to go very, very fast after picking this liquidity. It's going to go very, very fast to the upside. Is that okay now? Okay, so that's GBP AUD, guys. GBP card, GBP card. You know, we have discussed this pair on a number of sessions, and we have seen that this is a move down. Okay, after this an impulse, then I've shown you time without number that this is three-wave structure to the upside, three-wave structure to the downside, and then this is a short structure. This is a short structure, okay? But this is a truncated one, but it's also a three waves to the upside. And then this becomes W, X, and Y. So after that, you have to have this pulls down to the downside. And in making the pulls down to the downside, you have, after the first impulse here, guys, after the first impulse here, you're having a complex correction right here in the middle. Complex correction right here in the middle. A, 1, 2, and 3. That's B and that is C. Okay. So you can take this to be with 1, then with 2, then this with 3 is now coming in form of 1, 2, 3, 4, and 5. Can you see that's with 3? Because you want a leg lower, 1, 2, and 3. With 3 is going to end here. Okay, and after you have with 3 end here, then you still have with 4 and then with 5. So that's when this structure will have completed, and that is when a GBP card will be comfortable moving to the upside. But now what concerns us is this pullback to the upside. That's what we want to focus our attention on right now, that move to the upside. First thing I want you to consider when you see a structure like this is that you try to look at this move, because this is a deceleration on a higher time frame. This market is decelerating. It pushes to the downside. It's no longer convincing, and that can be seen clearly from the divergence that is associated with it. Can you see on the divergence you are getting a higher low and higher low, while you are making a lower low and lower low on the price? Can you see? So if that is the case, if we are gotten this on the based on what the divergence and the price is doing, then you want to see that if you look at this structure, can you see this ending structure? What happened here? The structure is broken. So as soon as structure is broken, I've told you time without number, just look for a fib retracement of that move that broke the structure. Okay, and target 50 to 61.8. Let's target, this is real area, let's 78. Let's target this place. So you can see that the market had come there with a wick, but we want to see possibility of this wick being filled up. You can't just buy at this present level that the market is. You know, it will not make any sense. So we want to see if these wicks can be filled up, because if you understand how higher time frame operates, you can see that this is a move up, this is a correction. We want this push down effectively to this level. This is where we'll be comfortable to buy GBP card to the upside, and you can see this clearly in a lower time frame, where we want to look at it and check our entry and all those things. You see that this is the move up I was telling you in 5 waves. You can see that this is the move up in 5 waves: 1, 2, 3, 4, and 5. This is a clean and clear Elliott wave, 5-wave structure. This structure clearly, depict what Mr. Elliott said about a 5-wave count, and it even replicates alternation principle right here. Let me show you. You have wave 1, then wave 2 is coming in form of zigzag, which is a fast push to the downside. Okay, it's coming in form of zigzag. You can see this. Can you see it here? Then you see wave 3, and then wave 4 is coming in form of flat. And what is the rule? The rule says that if wave 2 come in form of a zigzag, then wave 4 will have to be a flat. Do you understand? And then this is a wave 5. This is a clear Elliott wave 5-wave structure. Then if you look at what is happening here, we want a 3-wave structure to come down to this level. Okay, we want to come to this level, but it's possible that you could have a 5-wave move here. You have 1, 2, and 3, then you push down. By the time you push down, you are not going to end it at 61.8 here, because the equal leg between this wave A, between this wave A here and this one will have broken this 61.8, and it will have come to 78% field retracement. This will be the right part, or the right price level for you to look for a buy to the upside. And in that case, 61.8 of this 5-wave move to the upside. Where's the 5-wave move? 1, 2, 3, 4, 5. Can you see? This 5-wave move to the upside will be corrected to what? 78 instead of 61.8, because now equal leg will take preeminence over fib retracement. You have to hear me well, guys. Equal legs will take preeminence over fib retracement. It is very, very important, because if you are saying this impulse, you have measured it, and this is 61.8, and equal leg is coming to 78, you better choose 78. That is where you'll be looking for buy opportunity. And then in most cases, you're looking for this buy opportunity at this 78% retracement. You are going to see a kind of deceleration when market gets there. It's very, very important. And anyone that breaks the structure, pull back, that is your trade to the upside. Of course, this deceleration will confirm it with the aid of divergence. You see a divergence here. And then this impulse to the upside will also inform us to get ready for a move to the upside. Is that okay now? So that is a GBP card. Yeah, if you are not too technical in reading the chart, you can leave it, let it pull down, and develop this schematic, this structure I've shown you, before you look for buy opportunity to the upside. Okay, GBP USD. All right, GBP USD, just like all other majors. Okay, all this corrective structure must be over. Of course, you know this is a push down. This is 1, 1, 2, 3 in the middle. Okay, this is a push down. You have 1, 1, 2, 3. You want a push up before you fall. This is what we are looking forward to seeing in GBP USD. There's also a possibility here that we could have a drop down, 1, 2, and 3, and another drop down. But I won't sell this one. I keep saying it. I won't sell this one. It is this. It is the buy that I want. So right now I'm projecting for the buy. Okay, and if the buy is to come, guys, what you are going to see is an impulse. This is an impulse. Then you want a correction to this level to 50 to 61.8, and a buy to the upside to complete the structure. Okay, and then when you look at it, let me mark this level, So if you take out this one, go to 30 minutes, you will see that right here, pound dollar is already giving us a structure that confirmed to us that the possibility of upside is there, because right here you want to take this this particular structure has been taken out in 3 waves. Where are the 3 waves, guy? Let me show you clearly. So the 3 waves, guys. This one. Okay, let me do this schematic so that you can understand. This is 1, this is 2, this is 3, running flat, and it move to the upside. So can you see? Can you see? It move to the upside. So these 3 waves will have to come down again. You have to be corrected to about 50 to 61.8. And then can you see? This is the level. This is the level. Can you see how we project it? So And then you already see that as the move is coming down, it's also coming down slowly. Okay, it's coming down slowly. Okay, but it has not shown a divergence. It's shown a convergence, meaning that it moved to the downside, we still continue. There's no proof right now that it has an upside to make. Okay, because we do not see, even though this one look like an ending structure, but we do not see a divergence to show us. Okay, let me do the divergence again. Can you see? We do not see a divergence to show us that it's going to make a move to the upside. All we are seeing here is lower low, lower low, and here is lower low, lower low. So what's going to happen therefore is a situation where you have a corrective structure here. You have a corrective structure here. If it comes to this level, guys, and you take a few of this last leg to the downside, you see that for the mere fact that this corrective structure is a zigzag, to come to 78, and then from 78 you have a drop down to the downside. You have a drop down to the downside. But if it now get to this level, guys, if it gets to this level and is beginning to develop an ending structure here, okay, if it's developing an ending structure here, make a boom, then correction will take us to the upside. It means that our forecast is correct by saying that this initial three-wave structure is going to correct itself back to 51.61.8 or 78, and from there you can take pound dollar all the way to the upside. Is that okay now? So GBP CHF, okay, we got some move on GBP CHF about 60 pips. Okay, if you look at it on a daily time frame, okay, on a daily time frame, right from here we have been following this pair. You can see corrective structure, three waves up. Okay, 1, 2, and 3. Okay, so right here you see, right here, let me show you clearly, because it's very important you get your analysis right on a higher time frame, guys. Can you see? One, the whole of this corrective structure, and boom, that's all. That's the first three waves. And then you have a correction. This is a correction, sorry. This wave, I want to believe it ends here, and then this is a corrective structure, 1, 2, and 3. Can you see? It's a corrective structure in the middle, and then the other one, 1, 2, and 3, 1, 2, and 3, then 1, 2, 3, 3, 4, 5, 4, and 5. Simple. This is what we are looking for this pair. And you see, if you want to understand how I'm cutting the wave, you need to go and study my course on Elliott wave theory. It's available free of charge on YouTube. You know, for the mere fact that you are watching this video, you already have access to the content. So what are we looking for now for this pair? We want it to come over here. Okay, and in an attempt to come up, we have to look at lower time frame, okay, to see what it's doing. Okay, you don't need to be told. You have a three-wave structure to the upside here. Then what do you have again? You have a three-wave structure to the downside. Okay, what are you looking for, guys? You are looking for another three-wave structure to the upside. This is going to be an interesting pair to trade as we come to a new week of trading, guys. So right now you have the move already. You have a 1, a 2, a 3, then you push up. That's what we are looking for. Okay, so if that's the case, it means that we are expecting this market to come over here, okay, before we can look for buy opportunity to the upside. Then I go to my entry time frame in a 30 minutes time frame and see how the pair is navigating itself to come to this area. But then you have to look at this structure in the middle. That's a corrective structure. You see this structure in the middle. That's a corrective structure. Okay, what is it telling you? What it's telling you is simple. You can also see this structure in the middle. That's a corrective structure. So that is the first move to the upside. First three wave move to the upside, and this has to be corrected. in ABC or WXY structure. Okay, and in this case, look at the correction here. This 3 wave down. Okay, this 3 wave up. What are you looking for, guys? 3 waves down for you to have a move to the upside. Do you understand now? That's how it is. And then if you look at it very well, this 3 waves is complete, 3 waves is complete, 3 waves is complete. All you are looking for now is the last 3 waves to the downside, the last 3 waves to the downside. So, and you already have an impulse. So all we want is correction, and then a push down to break this low. Boom. Once this happens, this is a complete structure. Can I show you the structure? Yes. Look at it here. This is initial move, this initial move. Then you have correction in 3 waves, that's W. You have correction up in the direction of this move. That's, look at it, 1, 2, 3. That is X. Then you have 1, 2, and 3. That is Y. Okay, that is the corrective structure for this one. And then this is the move up. Then you now have a move up here. Okay, that's how this pair is going to be. And then let me now tell you the setup you are going to be looking at. I'm going to be looking forward to this setup, guys. Let me just draw it for you. You see this leg lower that we are looking for. Okay, we are looking for this leg lower. Then what you are going to do right now is that you want to capture 50 to 61.8% fib retracement. And then if this is what you want to capture, then you see that you have a 1, a 2, a 3. You have a 1, a 2, a 3. You must get a 1, a 2, a 3 coming to this level. Once you come to this level, it might give you a schematic that resemble an ending structure. It might not give you, it might just give you a drop down correction, then you go lower. So once you go lower, guys, to break this low, you know that the structure is over. Break this low, the structure is over. Then all you need to do is to wait for a maybe an ending structure. Boom, correction, boom. You're on your way to your upside to break this top again. Okay, break this top again. So that's what you should be expecting on GBP CHF, guys. So now USD card has been giving us a simple structure that we're able to read perfectly. We're able to read it perfectly. Okay, you know, I demonstrated this with balancing techniques to you last week, and I told you that this is a corrective structure in the middle. Okay, and this is a move up, this is a move up. So if this is A, 3 waves here is B, and you have a C here, then what of this one that come down, it balance this one. So if this is small big A, and this A, B, and C is a 3 wave structure that is B, then this one that move down will be C. Okay, and then what of this one that move up here? We need that one that moves up here. That's this one we are doing. You can see that it push up here, it push up here. It corrects in a it corrects in such a manner here. The same thing we are trying to do here. Do you get? So as far as I'm concerned now, I'm not going to buy USD card, you know, any longer, because I'm expecting a very rough ending structure here, before we drop down. Okay, so I'm going to be monitoring the situation on a higher time frame. As soon as I see that we have broken this top again, we are taking this top again. Okay, which means that we're on our way to the downside. You can see the behavior right here. You can see the behavior right here. As soon as that top is taken, it prepare ground for a move to the downside. But this time around, the downside is probably going to come to take, I don't know how it will happen, but it might come to take all this low to the downside before we resume any upside on a USD card. Well, if somebody still want to take trade USD card now, there's still opportunity for some upside on a USD card. We still have some opportunity, which I'm going to show you right now. Of course, you see that right here you have a three-wave structure to the downside. Where are the three waves? Can you see? One, three waves here. Two, that's a three waves. Then you have three-wave structure to the upside. One, two, and three. You see how I'm cutting the waves in the middle? This is A, this is B, and this is C. This is the wave in the middle, and the wave down 1, 2, 3 here is W. 1, 2, 3 here. Remember, this is C here, and this is C here is X. Okay, then we also want 1. Okay, A, B, and C now come in form of diagonal. This is A, B, three waves of B, and then C come in form of diagonal 1, 2, 3, 4, and 5. This is diagonal C. Okay, and after that you have break of structure, correction, and break. So now, after this structure is complete, then you have a three-wave structure to the upside. So now you have to take a fib of this three-wave move to the upside, find correction to what? To 50 to 61.8 around this level, and look for buy opportunity to the upside for USD CAD. This is how you catch, a buy opportunity to the upside for USD CAD. Allow a proper correction to be made here. Allow a proper correction. Sorry, this is too big. A decent correction back to this level. Okay, and take another move to the upside. Is that okay now? Let's go to Euro AUD. Okay, so Euro AUD, I'm trying to look at a scenario playing out this way. In GBP AUD, you're expecting a move down. So after these three waves up, we're looking at this as a three waves down. Okay, for a push to the upside before we push down. This is how I was looking at it. But I want to let me check divergence first. Let me check the indicator. Okay, let me check what's going on in the indicator, so that where's the indicator? Please come out. Okay, let's move on, please. All right, so we will look at it. I want to see possibility of this one still break down first before we take decision about this pair, and if I don't see my structure clearly on a daily time frame, I don't want to get involved in that pair on the lower time frame, because the possibility is there that you might be wrong on the lower time frame. You'll be guessing on the lower time frame. So if I can't get my structure right on the higher time frame, I don't want to get involved on the lower time frame, because of course this pair may have just complete its own corrective structure here, to continue to move down, and we are still anticipating an upside. So there is nothing right now to confirm to me that it will move upside or it will move downside. So for that reason, I don't want to go to lower time frame and be looking for entry. All right. So you will be surprised to note that if I'm analyzing my chart, I don't leave the daily. I'm constantly on a daily. I just go to my entry time frame when I'm looking for entry. If I'm not looking for entry, if there's no confirmation on the daily time frame, there is no need for me to go to entry time frame. If you do that, you will discover that at every point in time, you will be finding trades that are not relevant, that are not even there. Trades that are not there, you will be looking for them, because you are constantly on your entry time frame. It will be deceiving you. Do you understand? So now you have this market making. I'm looking at this structure. Okay, I'm looking at this structure. Of course, if you're able to identify your structure correctly on higher time frame, chances are that you get it on lower time frame. So I want to see upside for Euro JPY. I want to see upside. There's also a possibility. There's also a possibility of this pair making a 50 to 61.8% retracement of this move, okay, of this particular move here, retracement of this move. Look at a very good demand level here, and then come down. I'm looking forward to this possibility too. Okay, I'm looking forward to this possibility. It can happen. So I'm watching it very closely to see if that is what we'll likely see, and all still boil down to what euro dollar will do. Since we are expecting euro dollar to move to the upside a little and come down, there's possibility of this one also doing the same thing, moving to the upside and then go down. Okay, so if that's what we are looking for, that at any rate we want this to make at least 50 to 61.8 of this previous move. So if that is the case, then what I'll be expecting here is that this one is a three-wave structure, a little bit push up, and then if it can give me a three-wave pullback like this, then I'll be happy to buy this one to the upside. I'll be happy to buy it like this before any further fall to the downside. This is how you plan your trade, guys. This is how you plan your trade. This is how you plan it. So I'm not going to get involved in Euro JPY until it pull back to a certain level. Okay, and the only reason why I will sell, Euro JPY is if at this point that it made a pullback, once it complete the structure, if it's decelerating, okay, if it's decelerating here, making a higher high, and higher high, higher low, higher low here. If it's making a structure for me this way, and I can confirm a divergence to this structure, then I will know that, the fall to the downside here is going to be massive. So in that case, I'm going to take it, correction, and take it. I'll take it. So when I get to 50% retracement, you just close your trade in case that it's still going to push up from that level. Is that okay? That is Euro JPY. USD JPY. Of course, you've already gotten this move to the downside. All you need to wait for now is corrective structure 1, 2, and 3. Then, if you have an ending structure, always remember you have an ending structure. From there, begin a move to the downside. That's for USD JPY. USD US 100 daily. Okay, US 100, like other indices, seem to have completed a three-wave structure to the downside. And where is the three-wave structure to the downside? You have this correction. You have this correction here in the middle. You have this push down. You have another push down. Okay, and of course, this last push down is already of equal length to the previous one. Okay, so if that's the case, I would like to see this as a slow start to the continuation move to the upside. So, but what will confirm to me that upside is imminent? I want to see this as a leading diagonal. So if this is a leading diagonal, then we are supposed to have a three-wave structure to the downside, correcting that move. Of course, we cannot start that three-wave structure now because it's still bullish. It's still bullish. So what we're expecting is to have a 1, 2, and 3. So that 1, 2, 3 will come to 50%, and there will now resume upside. Okay, that's how I want to see these indices play out. Is that okay now, guys? Then US oil. Of course, I told you when oil was at 122, that my country, Nigeria, should not celebrate because they are oil-dependent economy. They should not celebrate because oil is going to come down to 88. And right now, it's exactly at 88. Okay? It's exactly at 88. So what we just have to do right now is to still see that it's still bearish. Right now, it's still bearish. Let's look at the indicator, creative strength index. Okay, okay. Sorry, I can't do without my RSI because I check divergence. I check a lot of things there. Okay, and this one should be black. Yes, that's it. Okay, so I check divergence. Can you see that on a daily time frame, it's still very weak? Well, it's still down. It's still down on a lower time frame. So which means every correction you still see is still going to be a sell. Every correction you see is a sell. Okay, continue to sell. Every correction you sell. Every valid correction you sell. That's how it is. That's how it is, guys. You see corrective structure here. 1, 2, and 3, 1, 2, and 3. If you make another 1, 2, and 3 here, you sell again. Keep selling until when that sell is going to be over, you are going to see an ending structure. Very simple. That will push up, then correction, buy your trade to the upside. That's it for US oil. Okay, BTC guys. Oh, that's good. I analyzed this pair and I have to tell you expressly what I did. Come to daily. Of course, we are looking for corrective structure to the upside. Okay. And if you come to daily time frame, you will see that this is a 3 waves in the middle. This is a push up. Then you are looking for this push up, and this push up is coming in 3 waves. Okay, that should end around this level before we can see a leg lower. But now this last 3 waves has just made one leg and it's now correcting. This is you can see that this one is longer than this. So for it to be equal, you must have this push up a little. That's how you look at waves. And can you see this one correction? It's a balanced structure now. Do you understand? So in trying to see how this will move to the upside, you can see glaringly that if you take a fib of this leg to the upside, this pair is hitting 50% here, and it's giving me engulfing candlestick pattern here. Okay, but I like to look at how everything is progressing on a lower time frame for me to see the possible area where I have to get involved in the buy. But of course, you see where this market is ending here. Can you see this range here? That we will not like to buy BTC anywhere inside this area. This is a fair value. Okay, you hear a fair value gap. Okay, there must be a fair value before you see a fair value gap. Is that okay, guys? So now, this is a space where retail trader deals. Okay, we don't want to deal inside this fair value where there is market equilibrium between demand and supply. There's equilibrium. So they really agree on the price here. That's why it keeps going up, it keeps coming down, it keeps going up, it keeps coming down. So all we want to do is a situation where this market can come to this area. Can you see that we have a fine demand here, no supply at all? We want it to come down. So now let's now analyze based on the available theory. Let's analyze this pair based on the available theory. Right now, you see that you have an impulse, a push down, even though it's very slow, and then you have 1, 2, and 3. You have 1, 2, 1, 2, and 3. Sorry, hold on, guys. Hold on, guys. You have 1, 2, and 3. You have 1, 2, and 3. Then you should have 1, 2, and 3, to complete the structure, and then move down to this place. Okay, by the time it comes here, then the correction will have been what? A, B, and C. This is where we are going to look for buy of what? Of BTC. And you can see that on a higher time frame, if you have to draw your trend very well, you can see that the trend is going through that level. Boom. It's going through that level. So I love to see a confluence between liquidity, Elliott wave theory, demand and supply. I like to see confluence between them. So go back to 30 minutes time frame. Okay, go back to 30 minutes time frame. You can see this pair right now. What I did was to say, okay, if this is A, if this is 3 waves up, this is A, this is B, and this is C. This is A, this is B, and this is C. Can you see? This is A, this is B, is coming to 50%, B. So where is C? 1, 2, and 3, C. So what I did was simple. This C here, I had to take a fib of this particular level, and I place a buy limit order at 50 to 61.8, and I look for a psychological level at 50 to 61.8, and it happened to be 23,000 right here. I place a sell, is a buy limit right here, a buy limit. Can you see? The market came and tapped that buy limit. Okay, it tapped that buy limit. I'm going to show you the screenshot on the chart. Okay, it tapped the buy limit and just make a move. It made a move straight to the upside. Can you see, guys? Okay, let me see if I can get the screenshot of that particular buy limit, guys. The screenshot. I'll show you the screenshot right away. So that's how you do it, guys. That's how you do it. How to send it to safe message on Telegram. Okay, so let me just show you that buy limits that I'm talking about. Just send it to, can you see it? Look at it here, guys. Can you see it here, guys? Look at it. So I placed the buy limit at 23,000, but because of spread, it cut through 23,000, and it was about going up, and it did not activate my order. And I discovered that because of the existence of spread, it was not going to activate it. I had to activate it manually. As at that time, it had gone to 23,059 instead of 23,000. But right now, it's at 23,194. Okay, it's making its move and it's going. So what am I trading? That's what I want us to know. What am I trading? Which wave am I trading? See the wave I'm trading, guys. I want to trade this C leg to the upside to complete this structure. And after that, this corrective structure will be over. Okay, this corrective structure will be over. Everything seems cluttered. Sorry about that. And then we'll have a move to the downside. Let me try to clean up some of these things. Okay, let me delete some. Okay, that is the wave we want to trade to the upside. This is A, this is B. We want C to come here. Okay, or in 5 wave here. That is 1, 2, 3, 4, 5. And then when it comes here, we want this wave to the downside. This is the right. I didn't send this to our trading community because I'm not interested in this small move. Okay, I just traded it for the sake of knowledge. What I need is this buy opportunity from this level. We want to buy from this level to the upside. Is that okay now? So that is BTC. Last but not the least, let's look at gold. Okay, gold. You can see that in gold, what we have here is simple. You can see this low. The market has not taken this low. And I keep telling you guys, if you have equal low like this, if market has not taken the equal low, that market is not going to make a comfortable move to the upside. Okay, so even though this market had made a WXY structure or ABC structure, instead you see three waves move here, you see another three waves move here. Let me show you. This one is very clear. 1, 2, and 3. Okay, this one is very clear too. 1. This is a zigzag. Okay, this is zigzag here. Okay, and then 1. Corrective structure in the middle. Boom. That's three waves up. Then you have 1, 2, 3, 4, 5. So since this 5 did not break the liquidity here, this structure is not complete. All right, this structure is not complete. So what I'm anticipating for this pair is a situation where you have 1, 2, and 3 correcting this 5-wave structure to the downside. Can you see this 5-wave structure to the downside? It will be corrected by this 1, 2, 3 move to the upside, and in that case, you'll be having if you take a fib here, you'll be targeting 50% retracement. Okay, and after this 50% retracement, guys, you'll be expecting a move to the downside, but meanwhile, you need to see for us to confirm that. We need to see something very clearly. This one need to still push up a little, then come back to the 50% retracement here, then make a boom to the downside. So we need to be patient to see more data, that this gold will present to us, that will confirm this forecast that we have. But at any rate, if we have correction, if you have a push up a little and correction to 50% here on a daily time frame, you just go to 30 minutes time frame, and when this is coming down, you'll be seeing a deceleration. Okay, when you get to the structural level at 50 to 61.8 here, you see this will move to the upside. Okay, any pullback, you now take it to complete the structure. Which structure? Look at the structure here. Complete the structure. And as soon as you get to 50% of this move down here, as soon as you get to 50%, you close your trade. What are you looking for again? Leave daily, go to 30 minutes, look for ending structure. Okay, look for ending structure, break down, get in, boom, to the downside. Where are you going? When you get into the downside, you want to break this liquidity. That's all. That's all, guys. You want to break this liquidity, and you can also do it in such a way that you want to get the same fib extension of this level 1, 2, and 3. Okay, for your trade to actually terminate at this level. Boom. That's all. Okay, so that is it about gold, guys, and that is all the pairs I want to be looking at. Some of these pairs here don't move, and they can stay in one place for 1 week. I don't want to trade a pair like that, but based on my research and my findings, and based on experience over the time, these selected pairs that I have here can give me whatever I need for the week. Whatever I need, I can get it from this. If you cannot get whatever you need from this pair I've listed here, you're not going to get it from anyone, guys. I'm not going to get it from anyone. Then AUDNZD that I actually traded it before, but it doesn't move. Okay, but let me just go through it for some of you that want to trade it. You see there's divergence here. Oh, sorry. Okay, there's divergence here. Okay, and you see this move up, there's divergence. That's why we're expecting a move to the downside. And of course, this correction is over for this one, as we already have 1, 2, and 3. Then all we need is downside correction and downside. That's all, guys. So I want us to wait and see that this correction, this move down is corrected to this level. Let it correct to this level. Then from there, go to your lower time frame and make a move to the downside. And how are you going to know that the structure is over here? When you get to this daily, when you get to 30 minutes time frame, you are going to see a kind of ending structure there. Okay, just look for break of market structure, correction, and boom, to the downside. Let me see if I can show you example of this kind of structure. Let's go to USD card. I think I did something like that this week. Go to 30 minutes, come to this place. That was how I caught the whole of this move. You know, our community, we caught the whole of that move. Of course, I show you this is an ending structure. When you plug in divergence, you see that this one is making a lower low here, and then right here, what you are getting is a higher low. So this is a divergence. Okay, and what trick did I tell you to be using? You see that this particular move here has broken this structure. Okay, this structure is broken. What broke the structure? This particular move has broken the structure. So I told you, when you see a structure is broken that way, take a fib of that structure, target 50 to 61.8, and look at how structure will progress down, how correction will progress down to that level. Okay, so now if you now remove this fib, let's not clutter the chart. Okay, we want to come down to this box. Now you have to study, you have to read the corrective structure that brings you there. Okay, I made a silly mistake here, but I think I got my profit back. Okay, I didn't take cognizance of the fact that this is a corrective structure here. Then you have a three-wave structure here. After the mistake, I got it. I got exactly what the pair was doing, and I caught it. Then you have a three-wave structure that came to the exact zone, guys. Exact zone. And this is a three waves down in W, three waves up in X, and three waves down in Y. And then if you cannot catch it at this fib level, you still have opportunity. Can you see? This is a structure that is already taken. Okay, after it is taken, what do you see again? You see a move up and then a correction back to 50% retracement, and this is the move. This is the right one that I caught. Okay, this is the right one that I caught. I did not give this trade to anybody because it was during news, and I didn't want to give trade to anybody while news was going on. Okay, but I didn't trade news here. What I traded was my structure. Okay, I traded the structure. The news came and I agreed with the structure, and you see, it smashed the TP straight. Took off and smashed the TP with, I think I got a 1 to 6 risk to reward on this trade. But 1 to 6, yes, 1 to 6 risk to reward within 3 hours. It smashed the TP. Do you understand? So that's the kind of entry signal, entry trigger I want you to be taking note of. That's okay, guys? I think we have done enough for this weekly outlook. Just take notice. If you want to know if what we are doing is the right thing, you get to look at last week weekly outlook and you go and check the chart. What we said will happen, did it happen? Go and check 2 weeks weekly outlook. There's not much time for me to be bringing them out and say, this is what we said, this is what happened, this is what we said, this is what happened. But you can go and check it by yourself. If it does not happen, but you will see that 80 to 90% of what we say will happen about the chart actually did happen. Okay, because we are not analyzing the chart based on our own knowledge. We are analyzing it based on the existing theory. We are following a guideline that have been tested and trusted. Okay, that's what I want you to also be following. Then if you are interested in mentorship, I am available to assist you. in any way I can. So just chat me if you are interested in mentorship. It does attract a fee, but I think it's moderate enough compared to the value that uh, I brings to bear. Okay, my mentorship program. You want my trading system. You want to analyze the way I analyze. You want to look at the market the same way I look at the market. You want to trade with me on a daily basis. The opportunity is there. I've created a mentorship program that can take care of that. If you are too busy, you don't really have much time to be on the chart. You still have opportunity to trade. If you can do buy and sell, we have a signal channel, that can assist you to get your trade signal. What you just need to do is to contact at Feiti. Just contact at Feiti on Telegram. Okay, just contact at Feiti on Telegram. Look at the lady. Contact her on Telegram. She's in charge of everything there. She's going to definitely respond to your message as soon as you send it to her. Contact her. At least we are making progress in the channel, in the Wave Trader Signal channel. You can see the result. You can see the result here. You can see it here. You can see it here. You see, you can have like 9 or 10 win and just maybe 1, 2. We had 3 losses this week, and we have 1, 2, 3. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have about 11 win, okay, and 3 losses, and on and on and on like that. You see, for last week, I'm going to show you, if I can show you a result for last week consistently like that. It's not, we're not guessing here. We're not gambling. Where is it? I'll get there. Just a little patient. You can see all the setup, and the way we do it is that when we send a trade, we send a markup with it. Can you see? Last week we only had 2 losses. Okay, and you have how many wins? 1, 2, 3. Okay, 4, 5, 6, 7, 8. We had 8 wins and we have 2 losses. And then one important thing is that some of those losses, we keep them small, and then we keep the win big. Weekly profit here 220. We are not interested in those that deceive people, that they say they make 2,000 pips a week, 3,000 pips a week. These are unrealistic. You will go to them, you subscribe to them, you will not get it like that. The reason why it is 2,000 pips a week is that they will go and trade indices, and they say they make 700 pips on indices. How many people have a trading account that can trade indices? Okay, so how many people? They will say they make 700 pips on indices, and they count it with it. At the end of the weekly report, they say, oh, they have made 2,000 pips in a week. If it's that easy, guys, everybody will be a billionaire in dollar or a billionaire in pounds. All right. So these are realistic results. Average of 250, 300, 250, 300 pips every week. If you can be consistent with it every week, guys, you will have financial freedom. This is what I want to assure you, and this is what I want to try to expose all my subscribers to. They should try as much as possible and not be greedy. Just take the little you can take in the weeks. Focus on consistency. Once you focus on consistency, sooner or later you will definitely get there. So contact at Feiti if you are interested in a signal, if you just want a consistent money and just want to take care of yourself. If you want to, we have a standard way of trading in that channel. Once we know your account size, we tell you the lot size you can use. So we are controlling the risk at our end, because we know if we lose a trade, we know how much somebody that has $1,000 account, how much is he supposed to lose there? We know. because we have a standardized lot size that you are supposed to use. Okay, so that's how we do it in such a way that everybody will be okay. And at my end, I'll be balancing the risk on everybody's account. That's how we do it. Okay, it's a realistic pips that we get consistently week in and week out. So do join us by contacting at Faity. You want a mentorship, you can contact me directly. I will guide you on how to proceed from there. And then you want free service, remain on this YouTube channel. You will definitely get free services from me. All my content for now, they are in YouTube. They are free of charge. YouTube, at appropriate time, I will put them down and and try to monetize them. But for now, they are free. All right. So thank you, everybody. I'll see you next week. Bye-bye.